It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, it's the Real Estate Breakfast. Yes, back again for another weekend, breaking down for you the Australian property market. We've got the Saturday morning property show coming up in just a moment. Aaron is going to be here. Now, the market, it may have slowed down, but people will be out there today, many people, but unfortunately for a lot of sellers, they're only going to be doing some window shopping. Yes, buyers, they're weighing up their options more than ever, and they're doing it at a snail's pace. The sprint isn't happening in the market at the moment. Agents are working harder than ever for their commissions, and if you are an agent, you don't cry about that because you know that you take the good times with the bad, and in this market, that is the time for agents to dig deeper than they ever have, probably over the last 7 years. It is a Saturday, August the 15th. Now, last year, you might remember Donald Trump floated this idea of a 50-year mortgage as a way to make home ownership more affordable. And the proposal generated plenty of headlines, lots of people talking about it, but it hasn't become a mainstream mortgage product. I wonder why. The debate still remains relevant. Lower monthly repayments, they sound attractive, but buyers would build equity more slowly and pay substantially more interest over the life of the loan. And we'll have a look at just how much that is going to cost you in just a moment. Would you, though, take out a 50-year mortgage if it got you into a property in Australia? Email us. Our email address is myrealestatepodcast@gmail.com. We would love to hear your thoughts, because if you don't have a property, are you that worried about building equity slowly versus actually being in your own home? There are two different things going on here. Yes, it's going to cost you a hell of a lot more money. So either email us or you can leave us a voice message. You'll find the link to the voice message note. You'll find a link in the show notes below.
You're listening to the Saturday Property Market Update.
So let's go to Perth right now and catch up with Aaron Scott. He is from Be Right Agent. Good morning to you, Aaron. Welcome into the Real Estate Breakfast. I understand that you have described that 50-year mortgage as a debt trap and possibly a death trap for life.
G'day, Craig. Great to be with you this morning. Look, absolutely. I think this proposal might get dangled with some very nearsighted short-term benefits, but ultimately it is a terrible proposal, and I think it will see people paying a lot more and a lot longer.
And what about in your age bracket, Aaron? Anybody sort of saying to you, well, at least I could get into the property market?
Well, look, I think it really pays to know what you're signing up for, Craig. People quite attuned to these sorts of things, and they can probably see through the short-term gain. You might be saving a couple of $100 every month in the near term, but dragging that loan term out over an extra 20 years, so up to 50 years, I think people can really see the danger and the downside of that.
And you've got some of those calculations that you can offer up in terms of these 50-year loans.
Yeah, that's right, Craig. So on a 30-year principal and interest loan, that'll be setting the homeowner back around about $4,500 a month. And over the course of that 30 years, the total loan repayments do reach a staggering $1.6 million for that $678,000 loan. Now, when you then compare that with a 50-year mortgage, so all the data remains the same. We go from 30 years to 50 years. Initially, that monthly repayment comes down a little bit at just under $4,100. So it sounds like a $400 saving every month. But when you work that out over the full 50 years, for that $678,000 loan, that's all you wanted from the bank, you end up paying over $2.44 million in total loan repayments. That's what I'm talking about in terms of a debt for life.
Yeah. That is crazy stuff. That is a very good illustration on why it's a dumb idea. Now, I mentioned that you are from Be Right Agent, and I'll just get you, well, perhaps we'll just go over some of the steps, because this kind of, I think, helps set this up for people. The first thing that people do with your business, homeowners, they enter their basic details with you. Then the second step is the agents offer their best rate. So from that, it's kind of like a bidding situation on best rate. Then the third step, the homeowner compares agents' offers, and then they look at what they're going to save. Is that about the guts of it?
Yeah, that's absolutely right, Craig. We're all about increasing transparency and competition, and ultimately helping homeowners save money and connecting them with a great local real estate agent.
So where did this come from? You mentioned to me off air, you've been going a couple of years now. So you're one of the smaller players in the market. What sort of sparked up this idea for you to go into this space?
Yeah, well, we sold our family home a couple of years ago, and overall it was a good process. But it did make us realise that there was an opportunity for leveraging transparency and competition, ultimately giving homeowners a platform where they could do apples for apples comparison between agents and make sure they're getting a great value and a great rate.
So that is the key word that I'm picking up from you, is that word transparency, because it's not always above board, you know, it's a little bit murky sometimes with different agents, different companies. This is very, very transparent though, because they've got to put in their best rate in terms of the agents bidding for the business.
Yeah, well, that's absolutely right. Walking into an agency is not like walking into a hairdresser's where you can see all the prices on the wall. It's a little bit more opaque at times. And so we've simply created a platform that's absolutely free for homeowners to use, that agents will be putting forward their rates, and then the homeowner can sit back and really make apples for apples comparisons and not have to worry about pressure sales tactics or anything like that.
In some ways, it's a little bit like the mortgage broker. There is no cost. Presumably, the agency or the agent, they're giving you some commission rate off that. Is that how it works?
Yep, so there's absolutely no cost to the homeowners, exactly like you articulated for the mortgage brokers. Rather than taking a percentage commission, because that would perhaps incentivise higher rates and higher prices for our benefit, we've gone with a fixed subscription model for the agents. So it's great value for homeowners, and it's also great value for the agents too.
Yeah, I can see how that all sort of fits together from an agent's point of view, because a lot of agents are listening to this. They might not have heard of your business before, and they're saying, okay, how do I subscribe? What is the cost fee here? So just break that down for us.
Yeah, absolutely. So both homeowners and agents can download the Be Right Agent app from iOS and Android, follow the prompts themselves, and then they're able to subscribe based on the number of postcodes that they want to be able to provide quotes to homeowners for. So it's tiered, sort of 1 postcode, 3, 5, 10 postcodes, based on the catchment area or the business model that agent's got, the area that they want to service.
All right, we're talking to Aaron Scott. He is in Perth. He has got a new business in the last couple of years. It is called Be Right Agent. That is BRIGHT Agent. So you can check that out. We'll have more from Perth after this.
Every week, unravel the real estate market to help guide your real estate journey. It's the Real Estate Podcast.
And right now it is time for another property tip as we take you to Sydney. Recently we were talking to Angelo Boras from Richardson and Wrench in Potts Point, and you've got a property tip for everybody.
Yes, guys, when you go to those open homes and you see a big crowd, remember one thing. The more people that want the home, the better the home is, because one time you'll come to sell it and you want the same amount of interest then. So if there's not that much interest, there might be something that might be wrong with it. So if it's got a lot of interest, it might be the right property for you.
What you've got to be doing is thinking restaurants, Angelo. It's the same premise, isn't it? If you walk past a restaurant, nobody in it, same scenario.
Something right. Exactly exactly. I've seen people overpay for things and then only years later I'm selling it for them and they're making money on it and some. So, good property, you can't really go too wrong.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast.
We have got Aaron Scott from Be Right Agent talking to us about how homeowners can very transparently find perhaps a better rate. You got nothing to lose. I guess that's the thing, Aaron, with a model like this, because they're not paying for it. The vendors who are listing their properties, they've got nothing to lose, so they might as well give it a crack.
Yeah, that's absolutely right. And, one of the beauties of our service using the Bright Agent app is you can get multiple quotes from multiple agents, even without opening your front door. They're all too happy to show an agent through once they're ready to select that agent, but they don't necessarily want to show a bunch of people through just simply to get a quote. And so that's, again, one of the benefits of our service.
Having sort of done that multiple times, it is a real bugbear where you've got to invite the agent into your home. Well, you don't necessarily have to, but at some point, they've got to be shown around the property. Then you've got to go through that dance with, if you've got 2, 3, 4 different agents, and then you've got to figure out which one is probably the best person to service you. What sort of feedback are you getting from the agents and the companies?
Well, we're getting really good feedback from agents that use our platform. Agents spend a lot of time on the road, as you know, and attending different properties and providing quotes. A lot of that time is spent going to and from the property. And so we provide them with an avenue that they can just quote directly from their phone based on the images and the short description that the homeowner's provided. And then if they're selected down from there, then they obviously link up with the homeowner and do a bit more of an in-depth meeting with them. And so it's a time saving for the agent. It's a cost saving for the agent as well, because they're not having to fork out a percentage of their commission fee to get that listing. And so we're really finding positive feedback.
If there's an agent, perhaps a new agent, hasn't been around for long, they might have been transacting over the last 12 months, maybe they've had a couple of months that have been quiet for them and they're thinking, gee, I've got to drum some business up from somewhere here. Then they get onto your site and they're prepared to just trim that rate down to get the business. Is that going on? Is that part of the success story for vendors to win with lower rates?
Yeah, absolutely, Craig. And it works with junior agents, like you've mentioned, but also senior agents too. They might have moved from somewhere in Queensland. Now they're somewhere in Perth working away. They might come with a lot of industry experience, but they don't necessarily know the local area, or they don't have a lot of leads organically. And so this is a great way for them to offer a really competitive commission rate to local homeowners, win some more listings, and then build their client base from there.
I think you're on to something here, Aaron. I think people listening, particularly those vendors that are getting ready to potentially list, they've just heard this conversation and they've thought, yeah, let's give this a crack. So well done.
Well, thank you very much, Craig. Yeah, we're a small team, but we're definitely growing. As you pointed out, there's no cost in it for the homeowners, so people can get on. Just like you compare your mortgage rate, you can compare different rates from different agents, get some quotes, and then decide who you want to go with from there.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
But will the infrastructure grow with it? It's a bit of a balancing act, which is probably all part of the conversations that you're hearing there.
That's exactly the point. Obviously, we've had some experience here with already some newer areas being built in Shellharbour City at Tullumbar and Corderwood. A lot of negativity about, obviously, no road infrastructure, public transport, other schooling, other shopping centres, etc., to match or the new addition of people and homes coming into the space.
And up to 10,000 homes around Shellharbour's city centre. This is a significant change in scale. No wonder everybody is having a look at this story, because it is telling us something a little different.
Well, it's totally transforming what the area is. And where we're up to, the highest building we've ever had is up to about 8 levels up in that city centre area. They've built recently a couple that have exceeded that down in the Shell Cove precinct.
We connect you to the best real estate information across Australia. The Real Estate Podcast.